Hey guys, welcome back to Pete's Investing. It's March 8, 2024. This is the German DAX update. I'll tell you what's happening with this is weird. The trend is still bullish overall, but there is a slight bearish divergence in play on the smaller time frames. In terms of basic German DAX news, the index was the only major European index to gain ground on Tuesday, rising 0.4%. This came as global equity markets paused after a strong rally earlier in the year, with investors looking ahead to key inflation data later in the week. So you can see we've got the weekly, the daily and the hourly, and on all time frames the ADX 25 is bullish. On the CCI 150, which is primarily our divergence indicator, we did have a couple of divergences and one still in play. We had the first one here, and you can see there the price fell off with lower highs on the CCI versus higher highs on the price. And the second divergence is still in play today. Lower highs on the CCI and still higher highs on the price. So that's making new highs as we speak. Just need to adjust that a bit. On the daily, there's also a bearish divergence versus higher highs on the price. No sign yet of a retrace. And on the hourly, we did have a zoom out. We did have a bearish divergence in our previous video versus higher highs on the price. Now that actually did fall back, but did it fall far enough? Now I like to take the Fibonacci retracements to the previous low before that divergence started. So in this case, let me just find the Fibonacci retracement tool, and there it is. Go back to that low there and take it to that high, and that's where we would have measured that. You can see there that those wicks, one time there and a second time there, would have just penetrated that 23%. You can see that if I leave the cursor there, would have just penetrated that 23%. So effectively did hit that range, but then it bounced from that double bottom there. So that's still in. Now we've also got another divergence still in play. Let me remove that. And that is between, if I draw the trend lines, if I zoom in, you can see there between that peak and that peak, it's a lower highs on the CCI versus the same period from there to there, you got higher highs on the price. So that's also a bearish divergence. So I'll keep an eye on that. Now in terms of target levels for this one, that goes to that high there. If I was to draw a target area, minimum retrace level, it'd be between a 23 and a 38%. That's our minimum target range. For it to come down at least touch there, if not, penetrate through it. Again, as always, if it falls below the 61% and it falls down much deeper than that, we're going to see possibly a reversal. But we'll keep an eye on that and let you know how it goes in the coming hours and days. As a trading idea for those new to the channel, I've got the daily here, this daily chart, which we track using the CCI 150 as per the previous charts I showed. So based on the daily trend, we take trades on the lower time frames. In this case, I've got the hourly. I've got two hourly charts here. The first one in green is the average down approach, and the second one is the stop loss approach. And what I've done here is I've put a starting point where the CCI 150 on the daily breaks above that moving average range. So when it breaks above there, that's when we take the first trades on both the average down and the stop loss approach. And the average down approach, basically, I've got the rules at the end of the video, so stay tuned. I've got the two rules for the stop loss and the average down approach. But basically the first rule is we go long only when the Heikinashis, this is the Heikinashii chart, when the Heikinashis are green, and go short only when the Heikinashis are red. In this case, we're only going long because the CCI there is broken above the moving average band. So you can see there, if we started trading from that point there, that would have generated 2,478 on the DAX on the average down approach versus 956 using the stop loss approach. You can trade this on any time frame. So if you were to trade any instrument, say on the daily, you would make this at the very minimum a weekly. So just again, always trade on the higher time frame, whatever the lower time frame you're trading. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. hit that notification bell, and we'll see you in a future video.